Good morning, good afternoon, good evening, depending on where you are in the world. This is Hejin Lee with a morning update for Bitcoin. And we are starting the decline towards the 8,000 marking. By the way, I'm having a difficulty with my trading view mouse. My mouse is here, but my damn cursor is to the like an inch away to the left of it. It's really weird. If anyone knows how to fix this, please let me know in the comment section. So I almost have to now, I can't point with my mouse, I have to point with this crosshair. I don't know if they had an upgrade or something, what have you. What's causing it? No idea. I've restarted my computer, restarted the whole software. If anybody knows, I put in a ticket. They say they're so busy, they'll get back to me when they can. Typical. Customer service is a lost art. Okay. So we're on a 4-hour chart. And this is labeled as an 1, 2, 3, 4, and 5. And I'm being asked sometimes, why I label it as 1, 2, 3, 4, 5. And I'm also being asked, why am I not using this line more as a flag? So in other words, do A, B, C, D, and E. Well, a leading diagonal to me is labeled with 1, 2, 3, 4, 5. Because it has 5 waves, 1, 2, 3, 4, 5 for 1, 3, A, B, C for 2, 1, 2, 3, 4, 5 for 3, 3, 4, 4. And now we're looking at 1, 2, 3, 4, 5 for the fifth wave. So we're saying 5, 3, 5, 3, 5. Just like a regular impulse. And in an impulse down, you get 5, 3, 5, 3, 5 in the number of subwaves. Except in a diagonal, you have an overlap of 1 and 4, and the waves get shorter and shorter. This is really the only situation where 4 can overlap with 1. So that's why I'm counting it as a diagonal. Besides, price has been obeying and staying within the boundary of these lines pretty well. Now, zooming in, I'm counting the subwaves of the last fifth wave. 1, 2, 3, 4, 5. If the trajectory of this price line is correct, it may touch the bottom line of the white triangle around February 6th or so. And this is I'm not calling the bottom on February 6th, but I do know this. If these boundaries hold and this support line holds, the closer the price gets to the apex, would be pretty interesting. Because the closer the price comes to the apex, more entrapped it will be, the less mobility it'll have, and more agitated it will become. And at that point, sellers will be pretty gone. Sellers would have wasted and spent all their bullets. They're doing their last one more hurrah down, sellers. Meanwhile, volume, peak to peak overall is declining. And I don't I don't currently see this as a crash scenario. It's getting really awkward trying to use this with the crosshair more to the right and not on the edge of my mouse. So if this was a crash scenario, and I go to the daily chart, and now I look at my MACD, it looks pretty oversold. The 9-day histogram is going a little bit lower, but it's not so far even close to generating a lower low. If we Elliott wave count this, 1, 2, 3, 4, okay, move there, 5. So as I had indicated before, we'll probably go to 1200, 11 something or so. If this was a crash scenario, from here to here, many of the sellers are gone. They have sold what they could sell. The final remaining remnant will be selling right now. What I want to also share with you is liquidity shortage. So currently we have, 17 million Bitcoins. So far. And I think, let's say 3.5, 4 million. Let's say 4 million. have been just lost. People screwed up on their wallets, forgot their wallet keys, whatever, whatever. So that leaves 13 million circulation supply. And I would say 65% are hodlers. And if 65% are hodlers, that leaves 3.5 million coins. Readily buy and sell on exchanges, one-on-one, for commerce, etc. Now, these numbers may not be exact. It's my estimation. So if we have 3.5 million coins, I can tell you that Wall Street is doing the exact same analysis. They have an army of Elliotians. These hedge fund guys have an army of analysts at their beck and call. And these analysts, I'm pretty sure, are seeing the same damn thing as I'm seeing. They're looking for a very nice entry point. So let's say I'm a hedge fund manager and I have $200 million that I want to invest and buy. Usually, I don't just buy 200 million. I'm going to go use OPM, other people's money, borrowed money. And let's say I do a 10x leverage. So that means I want to buy $2 billion worth of Bitcoin. And that $2 billion worth of Bitcoin will be bought using a good timing point. Well, heck, how are they going to buy $2 billion worth of coin with 3.5 million in supply, in actual supply ready for trade, buy and trade? Because the hodlers, they're hodlers. They're not going to sell. They buy to not sell. They don't care about corrections. Doesn't bother them. Now, once the buying starts happening, it'll be like anyone else coming into a very thinly traded coin and trying to buy 1 million coins. You will have to bid the price from 10 cents, if it has 10 cents, to $1, maybe $1.20, if the supply isn't available. You have to raise the bid to convince the hodlers to release their coins. And this happens quite often in commodities. And when these buyers come into a very limited supply situation, and these big buyers, what they do is they raise the bid. And this bid, the bidding war for Bitcoin, is what will bring it to 6 figures, in my opinion. It'll go to 23K, 26K, 30,000. Then these guys are going to keep bidding it higher and higher. And they're going to buy the dips. Every correction will be bought. and maybe at around 30,000. Some of the hodlers will release more of what they were holding because they think the price is so too good to let go, and it'll continue to be a bit higher and higher. That's the rationale that I have on buyer and seller and supply situation that could, from a mechanistic point of view, explain how this earlier wave, the next surge, can go to 23, 26, 30,000, 72, 76, 90, 116, 125. Hell, why not 250K? It wouldn't be unusual to see vertical moves to that level. Here, in not even a couple months, we went from 5,700 to 20,000. And that's exactly what was happening, a bidding war. So what does this mean? This correction is very natural, very healthy, very good for us. It sets up the next liquidity shortage event where the shortage of the coins will drive it up exponentially. And this next wave up will be a sight to behold. You ain't seen nothing yet, in my opinion. Once this correction is finished, and again, these hedge funds, Wall Street people have an army of electricians and technicians working for them. Once they get in and start piling in, this wave one, wave two is done. You could even go to, let's say, 6,000. Okay. But once this correction is done, it's wave three up on a near primary degree cycle. And wave three is the most violent, most aggressive wave amongst the 5 waves. I would not be surprised if the first surge is an all-time new highs, because the shortage of the supply of the coins and the buyers coming in will enable that, but at a much larger degree than what we've seen here. The key is the timing of that event. I don't know. But I've said, as long as price obeys this pattern, I believe we are more than 2/3 complete with the correction. And again, as I said before, don't be surprised if a very quick bullwhip, the confluence of pattern, earlier waves, and indicators. And the earlier waves are within the indicators and the early signals are all telling me that the correction, the end of this correction, is nearby. And I have my buy zones already set up, identified, to deploy my boatload of cash So I hope this has been helpful for you and informative. And I hope it helps you to get a bigger perspective so as not to panic into this, what could likely be one final leg of a lower low. If you have any questions, please post in the comments and I'll be happy to see if I can respond.